In the primary sector, there's a lot of things that kind of can create value and a good investment. At my farm, we kind of talk about three broad things. One is the sector and what's the kind of credentials of a sector. And each sector is set up slightly different, has slightly different dynamics in terms of the markets it's accessing, the supply chain it uses to access that market, and the kind of risk reward that comes with that. The second thing we use is we use partners, often post-harvest operators and others kind of in that supply chain between the farm and the market to either manage orchards or kind of lease those orchards. And so we're really looking with strong partners in those sectors that have good access to market, really good at managing those assets, have unique access to IP. So in the hop sector in particular, at the moment there's a lot of interesting IP that can be accessed through licenses, but you've got to be with the right partner. And then the third thing that we look at is the property. So looking at property specifics around the microclimate, is it set up right? What's the infrastructure, what's the soils, what's the water situation, and all those types of things. And you really need to tie all those three things together to get the kind of lights to turn on. What I've just got up here is, we do a huge amount of modelling because we're right across the primary sector, and that's kind of an average, shall we say, return over, say, 3 to 5 year period for most of the different asset classes there. And as you kind of go out that curve, the risk and volatility in those returns increase. So yes, you're looking at averages there, but the range that you could have increases or fluctuates up and down there. So one of the big things that we do is we look at land use change to create value. And so you're taking a bit of bare land and creating something different with that. So an example is buying dairy farms and turning those into hop gardens, which is a kind of higher value activity, using the right soils, the right water, the right setup around that. So that's a big thing that we kind of think about in terms of investment in the primary sector. So we come across the next slide. Some of the things that are really driving things, obviously interest rates at super low levels. You can actually get leveraged returns in the primary sector probably for the first time ever. And you would have seen that in commercial property or housing for a long period of time. Now that's kind of come to the primary sector. So that's an important driver of returns on investment at the moment. And then of course the other financial condition that's been very stimulatory in recent times has been the currency. The currency really acts as a buffer for returns in New Zealand. So most of the things are exported, and if things are not quite so good offshore, then currency tends to come down, and that has a buffering impact on farm gate, orchard gate returns. So that's really important. If we come across to the next slide, I've just got a little example of leverage returns there in terms of interest rate. Probably, if you only went back a few years ago, effective would have been about 5 or 6%. Now you can kind of, we're getting Kiwifruit in the low 2s and most other stuff in the high 2s to 3% borrowing rate for kind of new businesses that have been set up. And so you can see there the bottom line, the impact on return on equity is favourable. The other thing that's kind of creating a favourable investment environment at the moment is, while the cost of credit is cheap, the access to that from the banking network is much more challenged. And there's a whole host of reasons for that, but that's creating some distress situations and good buying opportunities. And so that's quite an interesting dynamic. And of course the other one is when we had a change of government a couple of years ago, there was restrictions on foreign investment. I can tell you, standing here today, if there wasn't those restrictions, there would be so much foreign money. Buying farmland in New Zealand would be funny. And so that's been a big driver in terms of keeping asset prices at a reasonable level, land prices at a reasonable level for the risk reward. If we come across to the next slide, so I was just kind of highlighting agri funding. You can see there credit's actually turned negative. Most of that's in the dairy sector. For the last 12 months, actually dairy farmers are starting to pay back some of that debt, and most of them have kind of moved to principal and interest in the last little while, or a bigger proportion of the bank's books have. So that's a big thing there. You can see for, just stay on that slide, foreign investment. So that was a bit of work I did a couple of years ago. If you updated it, I don't think it would have changed too much in recent times, but that looked at all the transactions from the early 2000s through to about 2017-18 and the proportion of sales or capital that had gone through in each of those sectors. So you can see viticulture, pit fruit, horticulture, that was a big funding driver for a long period of time. And what's happening now is a lot of those assets are owned by private equity offshore, and they've got a kind of a 10-year time horizon, and they're starting to divest, and some of that's coming back into New Zealand ownership and those types of things. So that's creating opportunities as well at present because of restrictions on foreign investment. If we come across to the next slide, look, just talking about markets, I talk about the polarisation of food markets. You can go into social media now, you can see every which diet under the sun, and everybody's got a different view around those kind of diets. And so you've got to be really careful in terms of the sector you're getting into, understanding what are the core kind of drivers of that market and where it's kind of in the cycle around that. I think the biggest impact that we're seeing over the last 6 months is COVID has actually seen an increase in demand across a broad range of markets for healthy, nutritious, natural products. Marnook, I was looking at the other day, in the last 6 months, in the last year, but mainly in the last 6 months, exports are up something like a third, 30%, and that's actually all retail packed product, monofloral honey, and the price point of that's actually gone up in the current environment, not down, even with a 30% lift in demand. So that's quite a story in terms of, particularly when you think about the price point of Mānuka honey, whether people want to spend a couple $100 on a jar of honey, but obviously in wealthy markets such as Germany, Japan, and even China, we're seeing good demand across all those markets. So if we come across to the next slide, Marlborough Sauvignon Blanc's really interesting. That's the lead brand in the wine side of things, and that's the main variety to make money out of. That's purely because the yield of Marlborough Sauvignon Blanc or Sauvignon Blanc in New Zealand is double offshore. So it's all about that growing environment is really important. The tonnage is probably 14, 15 tonnes a hectare versus offshore would be half of that. And then the brand position, and also the wine companies are really big into the retail channel. And so what you saw was, yes, demand got hit when all the food service operators got locked down. So if you were having a nice Pinot or some of those other varieties that are more consumed when you're dining out, that has had an effect on those pricing. But Marlborough Sauvignon Blanc exports are actually surging at the moment, because most of it's sold through retail, so people are going to retail and buying through there. So if we come across to the next slide, this just gives you a little example. This is in the US, and you can see there wine exports, this is through retail sales. What happened is normally if you fast forward that curve back, it's pretty flat, not exciting. In a post-COVID world, you can see what the first lockdown did for demand, and then it's kind of carried on since then. So that's a big thing for demand for Marlborough Sauvignon Blanc at the moment. And you're actually seeing the grape pricing starting to move or shift higher through the next harvest. Come across to the next slide. So you can actually see here, this chart, you're right, there's been a gap open up in the supply and demand recently, and there's some other things causing that, is that the land available to plant in Marlborough Sauvignon Blanc is diminishing, and then there's a whole range of water issues, and getting access to new water is more and more difficult. You've got to put in dams and more infrastructure and those types of things to take that winter runoff and utilise that. So, it's really interesting is that you've got a really strongly growing market and demand for Marlborough Sauvignon Blanc, but you've got constrained supply because of that resource. And that's what's opening up these jaws, and that's going to cause some price pressure to come through the next few years. And so when I talk about the sector and talking about the cycles, they all have different cycles, because Marlborough Sauvignon Blanc went through a big correction through the GFC period there, and there was a lot of people that lost their shirt. So you've got to kind of time that and understand that in terms of what that's going on. So if we come across to the next slide, this is just showing the markets. Yeah, who would have thought back in 2004 we were only about probably 60 million litres, and today that's heading up towards 350 million litres. So some of these smaller sectors have grown very aggressively when you think in a 10 to 15 year time horizon. And any primary sector investment, you've really got to think about a longer term time horizon of that 10 year time horizon, because that is what it is generally about. I've just got a couple more slides to keep to my time, so I'll just go across the next one. Kiwifruit, that's obviously been a phenomenon. And I think the thing that I've underappreciated is that kiwifruit's a small part of the fruit bowl globally, and they're actually taking market share. Zesperi's taking market share from other fruits such as apples, oranges, and those types of products. And there's actually a lot of demand upside potentially there if they continue to do a good job. Again, the agronomics are sun gold. You can consistently get a yield that is probably 30 to 50% higher than, say, green. And so when you put together a high market price with a high yielding product that's consistent, then your investment model is much, much stronger. Of course, we've had the momentum shift where a sun gold orchard, 5 years ago was worth $500,000. Today it's worth 1.3 to 1.4 million a hectare. So markets do shift. They're a little bit slower in the agri scene, but they do shift when the cash flows there. So if we come across to the next slide, the thing that I've been talking about is I kind of think we're kind of near the peak, but if you look at the forecast supply, that's kind of locked in because Zesperi's been issuing licences and will continue to issue licences. So growers are not going to pay $400,000 a camp a hectare and not grow kiwifruit that is going to be planted. And if we come across to the next slide, I'm just emphasising how small kiwifruit is part of the fruit bowl, and there's a whole host of drivers in a range of markets why consumption is increasing there at the moment. And when you think about that supply out of New Zealand, it's only a small drop in the ocean. It won't even shift kiwifruit consumption towards 2% globally in the next 5 years. So it's going to be interesting to see how that goes and how that affects pricing. A lot of people think sun gold pricing will come off. Sun gold pricing comes off, it won't be the end of the world. Margins are still good. They're the best margins you can get in the primary sector. But if they stay at $12, $13 a tray, well, that's kind of magical for returns. So if we come across, this is just a bit of markets showing that the higher returning markets are both Japan and China, particularly for sun gold. Europe is really, it's about the counter-seasonal supply for green into Europe still. Come across the next one. This is my last one. I've kind of been, I started right out in policy formation for the New Zealand Emissions Trading Scheme, so I followed this quite closely. Over the years it was kind of not that exciting until probably the last couple of years, and there's been a big reform of the ETS and other things just a few months ago. Pretty much the carbon price today is at about $30 a tonne, and when you put that across forestry and giving you early cash flow and some changes around how you're paid for your carbon credits, that makes an investment case for forestry that much stronger than probably it traditionally was. So that's just a quick snapshot of some of the trends in the primary sector as an example, and you'll hear a